The Hedgeless Horseman here. It's October the 2nd, 2023, and we have a very interesting start to the week, it seems. The markets are not live yet, but the futures or metals are kind of crashing, especially silver, dollars up, markets are going down a bit, rates are continuing to go higher. So we have basically I was gonna say risk-off environment. So of course most people will look at this and like, I don't know how many people might, let's say, throw in the towel today, because like I talked about before, the longer a bull gets, the longer a bull takes, no, wrong again. The longer a bear persists, people get exponentially more negative with every additional downticks. One of these days, if people are still hanging on, they're gonna, sooner or later it's gonna be the straw that broke the camel's back. And of course the opposite happens in an uptrend. If we would have been in a 3-year bull and you saw silver up 3% extra, imagine how many people would pile into that sector. Even though, that would be possibly the last gaps of a bull market, and what you have in store is like a 3-year bear market sooner or later. Now it's the opposite. We've had a long bear. Well, I mean, in silver it's actually not been, it's been more of a sideways action actually, when you think about it. How much has silver really, gone down, if you know what I mean? Yeah, 33% almost from the tops, I guess. But it's like, in the grand scheme of things, it's like, back to levels here, whatever. It's actually higher than any time before 2020. But it feels crap. Because volatility and volatile markets, etc. It feels like it's a incredible bear market. And yes, there has been lower highs and lower lows, kinda, at least until here. So one could perhaps say that it's been a bear market, but it's like, objectively speaking, it's like, just last week, it was almost in the midpoint of this, whatever this is, correcting phase or consolidation phase. But again, it feels crap because people haven't made any money, and of course most people are in juniors, and they have actually had a bear market since 2020, a severe one. And that's, I think, what colors people the most. It's not the metals. Gold is, pretty high. It's 1850. It's $150 from 2000. But my point is, like, I agree with Gary Savage. I really like him. I don't. Let's say I don't trade based on what he does, but it's like I always think he brings a fresh perspective, because he's typically very contrarian, and he's one of few I see who at times like this, for example, are talking about now it's really time to start thinking about the upside, because this too shall pass. So he's good at cycles, I would say, and he obviously knows that everything is cyclical. It's going from a downtrend to an uptrend to a downtrend, and especially the fact that people are mostly bearish near a major turning point when we're about to go from down to up, and vice versa. And he never as he would say, it's like this move here in gold and silver, or it has been correcting or consolidating for quite some time already. So that's why he talks about, that there's going to be a bloodbath phase, and he shows a few examples here where you have, gold breaks down, and then it's just to down, well, actually up a bit, but down, was going to say neutral, but down again. So it's like people get fed up because it's a bloodbath phase is when it feels like there is no bottom. That we have this much down action today, and let's say the metals close red tomorrow as well, and then the next day, and then the next day. People are absolutely gonna lose their minds, because most people, what they are concerned about, increasingly so, is to not lose money in the short term. And when you've lost, what appears at least, I mean, we don't even know what's going to happen with the miners. They might be sniffing out the bottom. But anyways, like, people can't they can't stand to lose anymore. Let's put it like that. And especially not in the short term. So everything becomes about coping. I cannot stomach seeing more red. I cannot lose another cent, etc., etc., etc. They're not thinking about deploying capital when they're seeing this. They're probably gonna get flushed out. And let's just look at gold. Okay, this is daily gold. This is RSI. Oversold, overbought, yada yada yada. So if we just look, since the start of the bull market, let's say, we're for sure down to pretty extreme levels if it closes around here. So okay, right now, and this might change, of course. Okay, let's do it like this. This might change, of course, because the day has barely started, obviously. Still, if we just look at what has happened since bottom of 2015, there's been 4, let's say, short periods of time where the RSI has been this lower. And I mean, it's not a huge difference. I mean, this would be like 21 and this is 23. I mean, it's, it looks like it's a chasm because that's just because I've zoomed in just to show. But so okay, let's see. One could say, okay, this would actually be almost as bad. I mean, RSI almost went as low as this. What happened? This was after, this was going into the 2016 election when Donald Trump won. That I remember. The other ones would be like here, and it stayed there until here, and actually here as well. What happened after that? I mean, that kind of kick-started. Gold went from 1100 to 2082 within the next 4 years. And it did not go lower here, I think. No, okay. So when you think about it, again, it's like, I know everyone is short-term focused, etc., etc. But like, for me, it's quite easy already because the valuations are so cheap. That's like, I already know what to do. I don't care if we go down 6 days in a row in metals, etc. That's already been priced in. Not that it won't go down, but the junior miners have already priced that in because they've been pricing in that the sector is crap, that no gold miner makes any money, even though they do, and this sector is not going to be around really in 5, 6, or 5 to 10 years, which it will. So it's already pricing in something that will not happen or is not true at the time right now. So I'm looking at this right now, for example, just for let's say out of curiosity, and also I guess I'm gonna make a point here. Other times would be here and around here, and the last one would be here. Okay, like there, let's say. Okay, so what can we see here? It's like, let's say we would be in this kind of situation, which I don't think. Still, it's like, oh, okay, what happened after? I remember this. It felt endless, the selling. And this was not even after a long correction. That's, I guess, Gary Savage's point, for example, that we've already had a long correction sideways, and the correction has been in time. This actually came, I mean, gold ripped from 1148 or something to 1300. So that's almost a 30% rally. And then keeled over. I mean, this was a rally, I guess, but like in the grander scheme of things, we've already had a correction, a massive correction. It's not like we're at the end of a multi-year bull move. No, it's actually been going sideways in 2020. So it's not like we're going from very optimistic sentiment to bad. No, we're actually already at bad sentiment. Most sellers are already gone, so there's not too much fuel, I would think. Even, I mean, the people who we're gonna sell, most of them probably have sold already. Where here people actually bought going into this, so there was a lot of, let's say, new buyers that, or weak hands, momentum trades that could sell. Anyway, even if you take this for example, it appears my computer is glitching out a bit. It was wrong. Around 69 trading days. Even if, one thinks this is, the first quote buy signal. 69 trading days. Yeah, that's, let's say 2-3 months. Is that a long time to wait for a 4-year bottom, best buying opportunity in the next? Well, I mean, we're not even close to being back at these levels yet. No, so it's like this would, even if you counted this as the first, RSI that went this far down, it was within 69 trading days of a 4-year low in gold. If we count this as the first one here, it was only 47 trading days before the lowest point in gold for the next, well, still, I mean, lowest point in at least 5 years. And then we have this one, which it wasn't actually the bottom. The bottom came in 60, well, let's say 68 trading days later. My point is, there's like I saw someone else talk about, like we're close enough. These are the RSI values we have seen. I mean, when it get this oversold, and it might continue more. I mean, we might go, who knows, 18. I mean, that's not a biggie. Maybe actually break this a bit, because I mean, let's say here you have a support zone, whatever, broke down a bit. Let's say you have a support zone going like here, broke down marginally. Here, for example, broke down marginally. And I remember I talked about this here. It's like the markets, especially miners and gold, for some reason, love to make false breakdowns or breakups. Or breakouts, you say. Break up. So here's like, tested 4 times, broke, then reversed. So like you should expect, I love to see breakdowns because I know what people are doing and I know what the banks or traders are doing. They're saying thank you for the liquidity. Now I'm taking a position and I'm gonna roll up the weak hands and they're gonna be piling in at the highs or whatever. But just the idea of like when we see in such extreme, I mean, this was close, this was a bottom as well. This was close, and this was basically the bottom for the next 8 years. I mean, we're obviously much higher. So like right now, again, people are gonna lose their shit because they can't stand it anymore. They've already suffered a long bear trend, and again, that's the thing. The worst mistakes you can make is to sell late in a bear market. That's the worst. It's like for juniors, for example, we've been, in my opinion, a point of no selling for over a year. It's already way too cheap. We're gonna make money on average if we don't, pick companies that are, might go bankrupt or something like that. It's like we're gonna make money. It's just a matter of time. So just going from some anecdotes since 2015. Every time RSI in gold has come close to these levels, it's been a multi-month or multi-year bottom within, let's say, 47 to 69 trading days. I mean, if you count, this was the best possible buy in the last 8 years, for example. That's the thing. The big money is made in the big moves. So people are gonna, and personally, okay, I kind of hope that people will lose their shit right now. I hope that we might see some market sell orders in some juniors. And like I talked about in the last video, given that, we also have this. Okay, here you have, it's not the exact same picture, but RSI, I've tried to mark a few ones at least. And I've added GDXJ, which is in the purple, and Bear Creek Mining, which is in the blue. That has already made, it crashed on, I think they did a financing or something. So it's actually now has surpassed the 2015-16 bottom. I think valuation buys, because they have diluted. So I think the valuation is actually around the level seen in 2016. Even though, again, share price is lower, but they diluted. But I think the market cap, etc., is in the ballpark of where I picked up some in 2016. And then it went, 600% higher or whatever it was. Still, okay, so what do we see? Okay, here, juniors kind of bottomed, well, at least Bear Creek bottomed with the RSI flushing gold. Here, gold started to RSI flush around here, and juniors went down more, including GDXJ. Here, well, I think here it's like sentiment has become so worse. So we didn't get. Well, we got a pretty good bounce. I think, well, here, for example, in Bear Creek, I think this was 200%. But still, you see that, okay, even after, well, did gold actually bottom? Okay, gold bottom actually here. But, okay, so, like gold, bottom was around, let's say here I have 81 days. Here I have 21 days from the first RSI extreme to the actual bottom. Here, like 49, again, a bit different than the one I showed just moments ago, but it's like, in the ballpark, let's say within 20 to 80 trading days, historically speaking, the entire sector has made a substantial bottom where you, over the next months or years, would have netted, I don't know, this was 200%, this might have been, I don't know if I can even, 262%. I don't even know if that's correct. Anyway, here we have 640%. Here it didn't get close enough. Here it bottomed later. Here we got the, I'm pretty sure it was actually 200%. Okay, 300% here. Point being, that's like, we're close enough. We are close enough. We are what looks to be, well, we're already too cheap. So that's my only, that's the only signal I use. What am I paying for this stuff? What do I think it's worth? It's like me, I don't use this as for making any decisions right now. But in regards to my previous article and what I recently talked about, the fact that beta is going up now, because the whole sector is going down to extremes. And yes, up here beta was overvalued. Bear Creek Mining was overvalued here, Bear Creek Mining was overvalued here, yada yada yada. But now beta has fallen so much that banked success that they're actually cheap. They are actually cheap. And when the sector is getting lower and lower right now, and might go, who knows? I mean, it's going to be interesting to see what happens today. I hope there's going to be volatility, because volatility means opportunity. If I see some beta plays that, let's say, go down, I don't know, maybe I'm hoping for 10-20% or whatever, because I am a bit underweighted in beta plays, because those are the when question, not the if questions. If we see stuff go down to trade at $10 or $5 per ounce in the ground, those ounces, without the company doing anything, they're going to revalue by hundreds of percent sooner or later. That is birds in the hand getting way too cheap. Let's just put it like that. And they are going to revalue, because this is a cyclical sector. And metals are cyclical as well. So, if you can buy stuff that, as long as they'll just be around, you're going to make several hundreds of percent on average, without taking really risks in terms of, will they find something? Oh, they have to find something to be good. I mean, exploration companies, they haven't really, well, some advanced ones have already kind of, found ounces in the ground, but like early stage stuff, they haven't even found anything yet, really. So you're taking a risk. You need to be right, or well, you have to look right that they actually will find ounces that then revalue higher when the value per ounces go higher as the sentiment gets better. But if you can buy confirmed ounces in the ground, you don't even need to take the if risk, the alpha risk. Because as long as they're around, they're going to go up. So, long story short, I hope we'll see some panic selling. I'm hoping we're going to see the worst panic selling we've seen. I hope some stuff, it's probably not going to happen, but it's like, imagine if some of these juniors went down 50% over the next week or two. That is going to be maybe better opportunities than 2015. If you have no idea how volatility works, if you're like everyone else that believe the bullshit put out by Mr. Market, that okay, they're going down because they were overvalued and are getting cheaper, and you start to believe the narrative that this sector is going to go away or whatever, it's like, yeah, then you'll sell out. You'll be the victim of volatility. You'll be selling at the end of massive, flush outs after a long bear market. Here people get flushed out. Look, it broke here and just went down. Here a lot of people sold all the way down. Here I bet a lot of people sold all the way on the way down. This is silver, of course, but the same goes for any sector really, because that's how psychology works. So personally, I am hoping that we will have monumental crashes in some juniors. I am waiting to, I hope I get some invoices paid shortly, because I'm ready to go. And we have tax loss selling season coming up as well. Well, technically, I guess we're already in. People can sell for tax reasons at any point in time. But historically, I think it tends to happen, near the end, like, let's say November, I think. So it's like we're going into a bloodbath phase right before tax loss selling season. Typically, is the most active, let's say. When people sell stuff and don't care about price, they just care about the fact that they're down on it. So it's like, who cares if you're down 70%? might as well sell and be down 80% because the whole reason you're selling is for tax loss reasons. The big, so that's artificial selling based on obviously tax planning. Again, has nothing to do with the value of the companies, etc. You cannot ask for much more than that. I mean, just imagine if there was a reason for people to buy from a tax perspective. Don't care how much higher, what high price they take. I mean, I guess that could be said for the, share to flow through stuff. And that's why you see some, really, really good premiums, etc. on those deals. So I hope again, after months or years of, trying to hammer home this idea that price is what you get, value is what you pay, and things will always change. This sector is going to be in a full-blown bull market sometime in the future. That's 100% certainty. 100% certainty. The only thing we don't know is when. So, obviously, if we know what's going to happen, that this sector is going to be ounces in the ground are going to be trading for $100 sometime in the future. If we can buy stuff for maybe $5, $10, $15 in the ground, obviously we would be happy waiting years for that to happen. And that is why it's like it feels weird since I'm 100% invested, but it's like that's the thing. With value shuffling, etc., I don't try to predict really the movements in the short term. I just take advantage of what Mr. Market gives me. So if let's say there's two companies today that I, have been watching whatever. Let's say I would think they would be beta plays because it's like, again, the risk reward in beta is actually going up more than alpha. Just two stocks that crash. Maybe if I sell something, pick that up. Maybe I just bought a stock that's going to go up, 600% instead of 400% or whatever before this flush happened. And this is going to happen. I mean, I hope I hope it just gets worse and worse and worse and worse. Because if it goes low enough, it doesn't even matter if let's say if my portfolio would be down 70%. I don't think that's going to be a problem at all, depending on what actually happens. But to be like a deer in the headlight and like, oh, everything crashes, I'm going to close my eyes, don't care about anything, I'm watching the portfolio go down and not do anything. It's like you're missing the whole point. The big returns are created in the crashes. The big future returns. If you make some quick, I was going to say some smart moves in volatile times near crashes, I mean, you probably have no idea how much that can affect your future portfolio. And again, just historically speaking, looking at gold since 2015. Every single time we've had RSI values this low is either at the actual multi-year bottom or very, very close to it, both in terms of time and price. Yeah, maybe up to actually, let's say up to 2-3 months of up to 2-3 calendar months. That's not that long, really. I mean, if somebody told you, it's like, just so you know, and I'm not saying it's going to be like this, but just imagine what you would do or how you should think, I think. If somebody told you, it's like, just so you know, someday over the next 0 to 3 months, the gold sector or gold itself is going to make a multi-year bottom. Within 0 to 3 months, you're going to see the lowest point in gold that it's going to be over the next, let's say, 2, 3, 4 years. Obviously, anyone with some common sense would like, okay, that's the big move. Do I need to get in here? Does it matter if I get in here or here if we're going to do that? No. Does it matter really if I get in here, 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 or here if we're going to do this and later do this? Does it matter if I get in here or here or here or here if, you know, gold goes up like that? No, you're obviously going to make money anyway. The longer the bull takes, or the more time goes. So obviously it's like, yeah, within a month you might be up a little, within, you know, 2 months more, whatever, within 3 months even more, within 2 years a lot, etc. That's the big move. That's what. So that's when, you know, time, then it becomes a rounding error. But in the short term, it's going to be very volatile, and you might think, oh, nothing has happened, or whatever. It's like, this has not. Yeah, again, nothing has happened. But just look farther ahead. Then it becomes literally a rounding error when you get in. It's like, okay, even if you get in here, does it matter? No, it was already too cheap. We're gonna have a you know, a 8-year-old bull market ahead of us. So that's the big play. The same goes for miners' sentiments. Like, who cares what the short term is gonna be? We know that the next big move is gonna be to the upside in miners, especially junior miners, the ones who will be around. So this is going to be a very interesting tax loss selling period. And for people who think that, hey, if my stocks go down for any period of time, or in any period of time, that means I've been making a mistake. Or if you're down now and you see more red, you think that, oh yes, okay, now it's obvious that I've really made a mistake. Then you don't really know how this sector works. You're believing the bullshit put forth by the market. You're believing that, let's say, scared money, panic selling. I mean, how the herd acts. That, okay, this is obviously the best time to buy. Why? Because it's gone up for a long time, and it's going vertical. The herd is saying this is the best time to buy in the last 4 or 5 years. This was the worst time to buy over this entire period. And here, of course, after a long, let's say here, it's like here, market is saying this is the worst time ever since 2016 to buy. Why? Because the trend has been down for the longest time, and price is lowest for obvious reason. This was the best time to buy. Now the market is telling you that this is the absolute worst sector to be in. You shouldn't be buying. You should be selling more. That's just absolutely ridiculous. So it's like, again, sheep get slaughtered. We know where the big move is going to be. It's going to be up. The big move, which I'm talking about months and years for it to play out. Now it's like the death rattles. The bear market's death rattles. Who cares if the next 30% is down? Again, let's say you bought here. Oh, it wasn't the end. Oh, it went down here. Who cares? First of all, you would have made money on it. Second of all, you would have, if you just average down like I'm about to do, I'm gonna make even more. I'm gonna make even more if I mean, think about this. This is pretty simple stuff. Imagine this was the bottom and just went up, and as I'm all in, I'm buying all the time. Obviously, I would have made less money up here than if this wasn't actually the bottom. It went down here before it went up like that. Because every single buy, especially, if this was actually how the stock just went straight up there, any single time the actual price was lower than the theoretical price where we just had a smooth up movement, I would have made even more money going up here. So let's just, for example, let's just say that, let's just say that the price went like that instead. So it felt better. Oh, thank God. This was the bottom in juniors. And then it went like that, and then like this. And let's forget about this crash even happening, just to prove a point. If it went lower and I got to put in more money at even cheaper prices, obviously I'm making more money. And that you've seen me with the short, the short where I painted a straight line and say this is the share price development that people dream about, just a straight line. Whereas if you had okay, this is getting kind of cluttered. So this is the share price movement and portfolio movement, whatever people dream about. Just a straight, you look smart every time, every single day. You look smart because you're making a bit of money every single day. So the ego, if you don't again know exactly what you're doing, and that the fact that price is not necessarily coinciding with value all the time, you would just be happy to see an increase in price, because yes, on paper you're getting richer every single day. The market is telling you how smart, how good of a boy you've been every single day to whenever. But and let's say you add also, so every single buy you do monthly buying, every single buy is gonna look smart the next day and until it tops. But this is the kind of nightmare scenario people think about, at least. It's like prolonged shitty action. Your portfolio is not making any money. Your portfolio is going down in price. So you're on paper, you're losing money. You're looking stupid for at least, let's say, until this period here. That's too much for people's egos to cope with, because I understand everybody wants to be a big cheese in finance, etc. Everybody wants to be making money all the time, because like seriously, it's understandable. Who wants to go in and do a job, and let's say if you're a mechanic, at face value it looks like you're actually busting, I mean you're not fixing the cars, you're actually making the cars worse. Is it easy to take pride in your accomplishments or feel like you've done a great job? Of course not. That is, I think, the biggest thing about investing, especially in a volatile sector, where you can look very wrong for a very long time before you look incredibly smart. It's too much, because you can't brag at the dinner table, you can't brag to your friends. There's like, I mean, the sector's been shitty for 3 years, and you hear about people, oh, I made money in this and that, and tech and whatever. So it's like, at face value, it's like, yeah, okay, they look smarter than me because they've been making money, let's say, over the 3 years, whatever. And let's say we haven't been making any money in the minors, so you look like a total loser for 3 years. Do you want to talk about that? Do you want to be tied to that? Can your ego cope with that? I'm not sure. The thing is that since we know what we're doing, and we know this is cyclical, and we know we're getting to just more and more ridiculous prices in the sector, we know we're gonna make a shit ton of money one day in the future, as long as we don't pick the absolute crappiest companies. So again, this is the share price performance people dream about. This is actually the ones that people make the most money from. Because every single additional monthly buy, if the share prices went like this, would net you a much higher ending value than a straight line. Because let's say, I mean, just for example, let's say a buy here along this perfect share price graph, 26%. If the one who had, let's say, a portfolio that just got cheaper and cheaper until here at least, let's say, well, let's use this instead. Okay, 28%. At this point, even though, this guy had, his portfolio has been performing, he's up, he looks smart every single day. This person who just, let's say, doubles down because he thinks this is just cheap getting cheaper, his future return on that buy is going to be 62% instead of 28%. And yet, let's say both buy all the way up. Every single month, this person adds to his increasingly more valuable portfolio, and the same goes for this person. So here it's just averaging down, just plugging holes, if you will, and then it's starting to go up, but he just prods along because he thinks value is up here, or he thinks value is going to be up here in 2 years, 3 years, whatever, and he thinks this is just cheap, getting cheaper. Every single buy since day one would have been better in this share price performance here. The returns would be have been higher than this person here. So this guy that looked more stupid than this person the entire time, pretty much. Well, at least if you look at the share price development. But this person would actually make a lot more money than this guy. So that's the thing. You can either choose to want to look smart all the time, or you have a fragile ego, you don't know what you're doing, whatever, but if you want to actually, in my opinion, make the most amount of money, you have to be perfectly fine with looking increasingly dumb over long periods of time. Because at the end of the day, and I've shown this in my own portfolio graph, where my portfolio goes down 50 to 55, 56% every other year, whatever. It's like over this period down, I don't know, 54 perhaps. Here, let's say 50. I don't think it went down 50, but anyway. But I was proactive because I know this was just too cheap. Did value shuffling. So even if my portfolio went down 50%, from here to here, I think it went up 600%. And as I'm getting better and better, I would think, at picking, especially alpha plays and value shuffling and all of that, my portfolio is not actually down that much over this period of time. But even if it was, even if I was down 50-60% right now, I don't think that's going to be a problem at all. There's stuff out there that I think have a very high likelihood of still being around for the inevitable turn. And when that turn comes and we go on a multi-year bull run, they're going to be up 400, 500, 600%. The alpha plays that actually make discovery and build on it, they might go up 1. Want to happen is to be down like 80-90% going into these lows here. But then it's if I'm down 90%, especially over long term, it means that I basically only bought the highs and never lows. And of course, the thing is that the smaller your portfolio is, the easier it is to average down. Because let's say you bought the top, you had a small position, because if you just bought the top, you probably don't have too much capital, because you that's not a sign of someone that let's say might have been doing too well just buying high. Even if let's say you started with $10,000, let's say you bought Bear Creek Mining up here, you're down whatever, let's say 90%, 95 even, okay, goddamn, you have $500 left. Let's say you put in $1,000. All of a sudden you have 1,500. Let's say it sticks around, so next month you put in 500. All of a sudden these levels are intact. Let's say you have a $2,000 portfolio, 400%, and you're back to even. Even if you went kind of all in at the worst possible time. But you corrected that by actually buying when it was extremely low. So this buy had long term it's not going to be minus 95, but for the time being, yes, you're down 95, because if Bear Creek is still going to be, if Bear Creek is around until the next upturn, this minus 95 is going to decrease, but your buys are also going to increase down here. So that's my best offense and defense, is to buy as cheap as I possibly can with as much as I possibly can. So long story short, you really get it when you start to love volatility, when you know how everyone's going to react. They're going to be puking today. They're going to see this. Let's go in and see what Twitter has in store for us. Well, yeah, this is obviously, stating the obvious. Okay, yeah, anyone who looks at this chart's like, okay, if you have a negative skewed sentiment already, you see someone posting this chart. Is that going to get you to buy? That's the breakdown. This looks like the start of a massive down move, right? That's why it's like, I think if the longer you spend on Twitter, the worse your returns are going to be. Because if you can't shield yourself versus all the, let's say, obvious things, or today Twitter's going to be extremely negative. Okay, are you going to be able to think rationally without having a very, very negative skew? Obviously, you can see the chart itself. It's like it stops here. If you had a long-term short, whatever, and someone showed, well, this is very cheap based on where it's going to go, then you probably would be bullish. This doesn't even have a longer-term horizon. It stops in November or December. So this is, the very nature of this chart is to show a breakdown, and it's like, this is happening now. We just broke down. Guess where we're going. Well, okay, maybe. I was hoping for more. Who knows how the algorithm works? I was hoping for even more, talk about crash, etc., etc. Well, market is open, so I gotta go to my watch list and be aware. It's like, be nimble right now. Don't try to force anything. Look what happens. Look what the opportunities the market gives you. Nothing might happen. Then boom, somebody sells some stock. All of a sudden, an opportunity presented itself. So it's like, when you really get how this sector works, when you get how psychology works, when you get how every market works, meaning that every market is emotional and irrational, very irrational at times, you are going to be loving volatility, because you are one of the few that actually uses volatility to your advantage. And of course, most people get abused by it. When volatility is, let's say, down, something crashes, they sell. When it goes up a lot, they buy. If you just think a bit different, it's like, okay, this is cheap getting cheaper, so you buy more. This is expensive getting more expensive, so I'm going to rotate out. You're going to be killing it. When you figure this stuff out, or it gets ingrained, that's how you start to think. You're gonna make money in this in any market forever, basically, over the longer time, over a long time horizon. Because, like I've also said, if your portfolio is down from here to here, and you think that means you made a colossal mistake, no, that's not how it works. And which I've also said, it's not the actual bears that kill people. It's what they do in bears. If you bought here, sold here, of course you're gonna get killed. Even if you started buying worst possible time, had some firm grasp of the obvious, knew that a sector is cyclical, or a cyclical sector is actually cyclical, and you actually would have bought increasingly so the cheaper it got. You'd already be up by quite a lot here already. But if most people buy here, sell here, get out, get into a new hot sector, and repeat the same mistakes, you have to break that cycle. So again, start to love volatility and don't care about at times like this, and we're going into tax loss selling. So you should not be surprised to see some stocks you own go down a lot. That just means that if the stores are intact, they're going to go up even more from that lower level. That's what you have to think about. It's like, who cares about the short term? Let's think about 2004, 2024, 2025. That's where we get bullish. We're thinking long term when everybody's thinking short term. When everybody's looking at these, where is it? When everybody's looking at this, like they always do, I mean, this, for example, here, yeah, okay, breakdown here. Oh, this broke down here, exactly. Oh, breakdown. That's really bad. I should sell. Well, congrats. Oh, breakup. Oh, that's broke above this line. Oh, great. I should buy. Well, congrats. Okay, here we have some kind of floor. Bam, big red candle. Someone could have made a horizontal. I mean, it goes all the way back here. So I mean, yeah, this was a breakdown. Yeah, that was the bottom. Stuff like that. So it's like, I don't give two shits about this short-term price movement in metals. First of all, the juniors are so cheap already that they're pricing in. Let's say, I mean, I think gold juniors still are more cheap, but I mean, gold juniors are pricing in $1,400 gold. So everything above that is like I was gonna say a bonus. So who cares? But it's like, you got to learn. That's my message. If you know how people think, you know what they're gonna do. You know what time frame they're looking at short term. They're looking at they're thinking about the small moves. They're thinking they have to win every single day, so they don't look stupid and feel bad. We're thinking about the next big move. We're always thinking about the I should have brought my Bear Creek mining short. Anyway, we're thinking about the next big move. We're thinking about the next. I've shown that graph 100 times before. So let's go out there and be smart. Let's be smart. Let's be smart. Always focus on, okay, what's the play here? The play right now is not a short-term play. I'm not buying because I think juniors are going to be up tomorrow. Not even necessarily they're going to be up next week, next month, or next 3 months. Next year, next 2 years, I think they're going to be up a shit ton from these levels. That's the play. That's the big move. The big move is the long-term move. And right now, the opportunity in the next big move is from these levels to much higher levels. Short-term, I have absolutely no idea. Probably down. Doesn't matter. My play is not right now to make a bit of money in the short term. My play is that, let's see here. This is, oh Jesus, we're already down here. We're like, yeah, the opposite of this. It's just fascinating. I'm very tempted. I might actually buy some Bear Creek, because I'm not gonna be piling into Bear Creek. Who knows? They might go bankrupt. But this is the next big move. We're at such extreme lows. Next big sector move is higher. That's the big play. That's the only play. Heck, if I bought here and thought, I'm gonna buy because I think it's gonna go up in the short term, I have to look right all the time. Okay, it went down. Okay, I sell out because I'm stupid. Okay, I'm trying again. Okay, I'll sell out because I look stupid. No, I was waiting for the big move. That's why I bought here as well. And that's why I bought here as well. And that's what I'm buying. Why I'm buying here, even down there. So let's again know what you're doing. Don't invest money you cannot afford to lose. But like, for God's sake, know why you're buying. Know what the play is. Are you a short-term trader? Well, I can't help you in any way because I'm suck at short-term trading or trading overall. The only obvious big layup, maybe the biggest layup since 2000, is that juniors are just absurdly cheap, and the next big move is going to be way higher because this sector never stays this cheap forever. not even for that long typically, and it doesn't stay this overvalued for a long time either. So that's it. Again, don't invest money you cannot afford to lose, because what would suck is needing money going into tax loss selling and needing to sell, because then it's just, it just sucks. Okay, thanks for listening. Bye.